I'd like to welcome everyone. Happy New Year. We're closing out the month, but I think it's still okay for me to say that. We want to welcome everyone to our series of webinars that we try to do every 2 to 2.5 months with our partners here, our database partners, IDC. Today we are going to have Bob Parker, who's going to be the SVP of Research, talk a little bit about AI. And we, of course, have Loren Loverde, who is VP of Data and Analytics. And they're going to share some of the information, some valuable research that they share with us. So I hope you guys enjoy that. But first, let me pass it on to Frank to say a few words and cover a couple of slides.
Thanks, Kavita. Appreciate it. And just for the record, it's kind of late for a Happy New Year. Just saying. Anyway, couple of things I want to cover just quickly. First of all, as many of you may know, because we've got almost 200 people currently registered, we have our North America GTDC Summit coming up February 7th and 8th in Oceanside, California. We do this meeting once a year. Great opportunity for a lot of folks in the industry to get together. All the key distributors, both in North America and frankly globally, will be there, as well as right now probably 50 to 60 vendors. So we're looking forward to that. It ties to this meeting for sure. The keynote will be presented by Crawford Delpreet, the president of IDC, who was there last year, and we're really looking forward to that. We'll also have a number of panels hosted during the morning. Second event that you should be aware of, that there's more time, obviously, is June 4th and 5th in Amsterdam. We've got our European Summit. In addition to that, Bob, if you can go to the next slide, I just want to highlight two things we've introduced this year, or one of them we will be sending out. First is we sent out back in the probably the fall timeframe what we call an innovation enablement guide. As many of you know, there's just continued innovation in our space. There always has been, there always will be, but this time things seem to be a little bit more going on with AI and all of the technology enhancements we're seeing. This is a guide that will talk about how the distributors will help enable and accelerate sales volumes into the marketplace with all the new innovative announcements and product developments that are coming. So you can get that on our Knowledge Hub. We will release at the end of this month a view of the cloud marketplaces and the role distribution plays with that and how they work cooperatively with vendor platforms as well as hyperscaler platforms. Next slide, Bob. And then finally, just a reminder to go to our Knowledge Hub, and you can get all of our content there, including all of our podcasts, which we do about every 3 weeks, as well as all of our research reports and any other information that's important to you. So with that, Loren, I'm going to turn it over to you for a review of I guess last year and talk a little bit about this year.
Yeah, thank you, Frank. So we'll for my section, we'll focus on the IT distribution results. I broke it down into key segments, so a bit of macro overview and then top line trends. We'll get into product groups and then pass it to Bob for the section on AI. So, starting with the big picture macro overview, we have a little bit of uncertainty that's going to continue to disrupt the market, but broadly, we were more resilient in the US and in Europe than expected. There are vulnerabilities, particularly in Europe around the war, and there's uncertainty around China, whether it's the property segment or the stock market. that, and just uncertainty about the reliability of their numbers. But broadly speaking, we've enjoyed a relatively stable environment considering post-pandemic and all the variables that are out there. We do see businesses being a bit more cautious. So we've talked about the resiliency of spending, particularly on the enterprise side, and we do see some increased caution. Part of that's geopolitical related to the wars. Part of it's lingering economic concerns. But I think it fits into the category that we're resilient but still wary of disruptions. And so that the last several bullets on this slide add a little bit of detail. Inflation is coming down, but we haven't gotten to that 2% target in the US yet. I'll show a slide that shows the trend. Similarly, oil and other commodities are volatile, also affected by geopolitical conflicts. And then labor and actually consumer demand also have been remarkably resilient, and that's really the bedrock that a lot of this is built on, the economic stability is built on. So we've had lots of opinions and folks hedging and wondering how well that's going to hold up, but so far it's doing pretty well. So there are risks related to that, but we have a slightly better outlook on that going forward. The most recent results from our Future of Enterprise Resiliency Survey. So this is monthly survey of nearly 1,000 industry leaders showing their expectations. And what I really want to highlight here is that these are kind of bread and butter economic issues. So inflation is the top factor, staffing and labor, of course, are very related to economics, and then recession is the next item. So, one good thing about that is wild cards like wars or tech disruptions are not at the top of the list. But, it's an election year in the US, and that foundation of economics is going to remain front and center. If we look specifically at inflation, on the left, you've got the total inflation. And obviously, we've had a recent peak in 22. We're now down to the 3+ range. You can see we've basically touched near 3% a couple of times, but we haven't gotten below it. And so that is, there's plenty of news around that. That's just the circumstances right now. On the right-hand side, you got a breakdown. You can see the outsized impact that gas prices have had. Natural energy in brown also is significant, and that's remaining low. And shelter in gray is remaining high. So that's just, background economic trends, but we are, the most recent energy cycle was declining energy prices, and we're coming out of that. So that's going to make it a little bit harder to push down the top line number in the next couple of months. So, we have persistent challenges, but relatively stable environment considering past disruptions of past years. This is survey data on recession fears. So the most obvious thing here is relative consistently high expectations of recession, which is a little surprising to me given the improvement. But the biggest change is in Asia. So you can see that between the wave 9 and wave 11, so just a couple of months difference, the AP feedback went from less than 40% to over 60% expecting a recession. That's a pretty dramatic shift. In comparison, the US in the top, or North America in the top right, has changed a little bit, but the most notable thing to me is that the recession expectation was much higher than the other regions, so consistently above 80%. And I'm not sure if that's, political messaging or we're more sensitive or why that is, but that's what the data show. And then Europe has improved a little bit. So, I think while we're classifying all of this as relatively stable and relatively positive, we're also seeing these lingering concerns about the risks in the market. So translating that into macro tech spending, this is our IT spending in blue versus real GDP in green. This doesn't change dramatically. Most of the tags in orange haven't really changed. But what I want to call out, if you compare it to prior calls, is the dashed line, which is a downside scenario, particularly for 2024, which in the last round was significantly lower. So IDC's outlook, we've basically raised the downside scenario, reflecting continued strength in the economy. Actually, we just recently got some GDP numbers that came in ahead of expectations. So more data that kind of, strengthen the economic picture, reduce the risk of a recession. And yet, from the last slide, we saw that there's still a pretty substantial lingering concern about the economic risks. So, all right, let's move forward into the distribution spending trends. This is a macro picture. The main takeaway really is that 2020 was slow because of the pandemic. You can see that PCs had an outsized jump, which we've talked about, in all of our calls, and that now on the right-hand side, 2023, personal computing and devices have had weaker growth. And so AV actually is the lowest growth this year, also from very strong growth last year and the year before. PCs and others are also there, which is pulling down total revenue, whereas enterprise spending, the orange and light blue and green, services, software, and infrastructure, those remain positive for 2023. Jumping into the weekly data, so we've seen, if you look at the dashed orange line, you can see gradual improvement in the trend. I'll just remind you, that's a polynomial trend, which helps us see the trend in those volatile weekly numbers. The area is the actual spending, and the orange line is the year-on-year growth in actual spending. And if you look at the far right of that orange line, you'll see that week 1 of 2024 dropped by more than 20%, 23% year on year. And that's sort of a significant decline, but if you look at that red dashed line, you can see that is showing that the first week of each quarter over the last 5 quarters have actually had this substantial decline. And it's not actually pulling down the overall trend. So, useful data points. We did see significant double-digit drops in July and mid-September to October, but we've also seen stronger growth in, or lesser declines, at least in the in-between periods of that orange trend line. So anyway, overall, we're down from 2023, but we're still up from 2021. So, I think it's useful throughout. We're kind of reminding ourselves of that pandemic context, and we should have easier comparisons going forward. So mostly the lines will trend up. So go ahead with the build. You'll see the 2-year trend. Really, it's very similar. The main thing I want to point out is that week 1 on the far right of the orange line really does not stand out here. And that's because of the, year-on-year sort of cumulative trend. So an argument that it's a data point to be aware of, but I think not fundamentally changing the trend. We look at the 2-year averages. So still fairly similar. What stands out is the dashed line on the left is continuing down. We really don't see the trend recovering. And that's because the little bit of growth that we've had in recent months is pretty small compared to the trend over these last 2 years. So that is trending down. Go ahead with the build. Having said that, the macro environment and that new growth is there. If you look at the trend, we're really not that far below 0, and particularly in a 2-year level, we have actually, it's less than 3% at the bottom, and we're already tipping up. So relatively stable in terms of overall spending. If we advance and we look at Canada, so North America, the US clearly is a lot bigger than Canada. We've had US in orange here. We have some more pronounced cyclical growth in the US. Canada has been stable. What you notice of the blue line for Canada is that it's dropping off pretty quickly in 2023. And that, that's worth keeping an eye on. If you look at the middle chart, particularly that red rectangle, that is highlighting very strong growth at the end of 2022, which is what we were most recently comparing against, and also a fairly significant slowdown from Q4 into the first week of 2023, which on a comparison basis, and particularly for a trend, which basically needs several data points before it starts to turn around. That's why we see these the dashed orange and the solid blue lines here taking a nosedive. But I would say that pretty soon those are going to turn around. So go ahead on if we build, we have a right-hand chart that's showing the 2-year trend. We do see the downward direction still in Canada. But if we look at that dashed green line actually on both charts, that's the 2-year lag on the Canadian exchange rate, which has a very high correlation with US trends. And that's improving a little bit in Canada's favor. And we actually have a couple quarters of additional data here, which that trend continues. So I would expect the Canada trend to pick up is the core takeaway here. On a product basis, really adding some detail to what I previously mentioned. So consumer devices are the dashed lines, and they've been negative over the past year, but they've improved significantly. So PCs turned positive in December. Tablets and other PCs, which are not broken out here, but will be later, they've continued to decline. Software and services trends have remained positive, although we have seen some negative growth in the last couple of weeks. And then the infrastructure hardware in orange here is slowing down. That's another case where the trend looks a little exaggerated. So we had nearly 40% growth in June, which declined to double digits in October. We've only had a single decline since then. So this trend going down is appropriately reflecting slowdown, but it looks a little exaggerated in this view. So go ahead and do the build. We'll see on the 2-year trend that infrastructure line in orange looks much, much better. But we do still see consumer devices, the dashed lines are remaining negative. So, again, pre-pandemic adjustment, you can see they were the highest growth in 21 and 22. And we're paying the price for that right now, but we'll be pulling out soon. Okay, so now we're focusing on software, and on the far left, I want to focus on the surge in software spending in December. You can see that really clearly in those dashed blue lines spiking up. We continued to see that in this most recent December. We were up 7% year on year. But we do see the overall trend slowing. So that's the dashed blue on the right-hand side. So peak from almost 2 years ago, Q1 2022, small declines since then, but we've had some negative growth. And then we did have a pretty slow week 1. In terms of remember, this is distribution revenue. It's worth keeping in mind that the total software market has remained more resilient. That's expected to grow about 12% in the US and worldwide in 24. So, there's what we'll talk a bit about that, but distribution has basically access to a certain segment of software. All right, so within distribution, the systems infrastructure trend, blue dash, did turn positive in December after a little bit of softness in October, December. The orange line, which is other software, is one of these cases, another case where the trend is sort of it's a smoothed version of what the underlying growth is. So we saw peak growth of over 100% in August, and we've still been averaging over 30% since then. So really solid growth. And even though it's turning down in this chart, basically persistent, real solid growth there. Similarly, apps have been in decline for several quarters here. They haven't yet turned the corner. That's the gray line going down at the bottom. And app development and deployment is another case where it looks exaggerated. We've had decline of, very strong growth in December and then a mild decline recently, but that decline is actually pulling the trend down. So jump ahead to the 2-year trend on software. So just the middle chart and the right bullets have changed here. Overall, we are seeing that the blue line system infrastructure is dipping below 0, and the overall spending is right around 0. But if we look at the 2-year trend, the hardest comparisons are behind us, and we should start to see that trend even out. Other software, again, in orange. So I talked about the strength last year. We've actually had an average of almost 15% growth since pre-pandemic. So even though it's slipping down, if you look at that long-term trend, we've got a pretty solid base for growth and would expect that to continue. Apps growth in gray. So here you saw before the build, apps was kind of going through the floor based on a short-term trend. Here you can see it already turning around. So on the 2-year trend, we had positive 61% in week 1, which is enormous. Sorry, that was a year ago, 61. And then we had the bottom of 45%. So actually, if you look at the left-hand chart, the gray line, you can see that big spike in the middle. And that's really what's driving the trend. But overall growth in that category is gonna smooth out and remain, I think, more stable. Let's jump ahead to services. So overall services have performed even a little bit better. Their growth came in at 5% for the year, which is down from 12% in 2022, but still, solid mid-single digits. The economic pressures, inflation, and discretionary spending have cut into the growth, despite some fundamental drivers like Gen AI and cloud and digital transformation. So, we do have some pressure on the services market, but pretty solid results. The slightly smaller categories, so extended services agreements and other supports and warranties, have all turned up in recent months. If you do the build, we'll see phone consulting, which is hardware and software support over the phone primarily, declined significantly in Q4 and into Q1, and so both of those trends are turning down. That seems, like related to this discretionary spending element, where a lot of companies are being a little more conservative on what they spend and focusing on higher priority services and digital transformation and AI and cloud and so forth. And this type of support is a little bit under pressure. But for the most part, you look at all the other trends, they're pretty stable or turning up. And, we expect that to continue. Going into PCs, so we've had, I mentioned earlier that, PCs had this big pandemic bump, and now we're kind of paying the price for that. We do see tablets and PC others, which is things like thin clients. They're continuing to decline year on year. That's the solid light blue line. But the other categories, notebook, desktop, and workstation, the bigger categories in dashed blue, darker orange, and lighter orange, have all turned up in recent weeks, and the trend is going positive. We did see fairly solid growth in week 51 at plus 33%. And so anyway, things are looking better there. Let's see. So again, kind of pandemic context, we are down about 23% from last year, but the post-pandemic high, but we're still up 3% from pre-pandemic. So the expectation you'll see in our broader PC market forecast, we just had preliminary results out, and we're starting to see PCs turn the corner. All right, last build here. 2-year trends overall remain negative. So again, the recent gains are relatively small compared to the past couple of years. We do see that desktop ticked up, and that reflects a little bit better growth. But also, if you compare the trends, that orange line didn't hit the highs of either really any of the other categories. Tablets has been lower before, but notebooks and workstations in particular were much higher. So finally, the outlook is cautiously optimistic. We do have some drivers like commercial transition to Windows 11, AI PCs coming, and inventory refresh. So we are cautiously optimistic going forward, but growth is still negative in PCs at the moment. All right, that's the distribution revenue trend. So let me pass it to Bob, and we'll talk about AI.
Thanks, Loren. And hi, everyone. Thank you for inviting me to come speak to you about Gen AI markets. I will preface this by saying a couple of times during Loren's presentation, my network froze. So if I lose you, it'll be momentary. Shouldn't be too long, but I apologize in advance if we have any issues. So talking about Gen AI, I went to Dreamforce last year, the large Salesforce conference, and Mark Benioff was interviewing Sam Altman from OpenAI, and this was before all the drama, the firing and the rehiring. But Mark asked Sam what surprised him most about all of the chatter going on, all the hype, and his answer was that it worked, which was kind of a now he tells us moment for me, right? It's like now he tells us. But when I was thinking about it some more, I don't know what your experience was, but I've been tracking AI technologies for a very long time, going back to grad school. And so my expectations were muted when I tried ChatGPT, but I have to say, after using it, my impulse was it worked. That was good. So I think it's pretty obvious or apparent why Gen AI has caught the imagination of tech buyers based on that experience. So what I'd like to do today is take a look. I'll break down the markets for you as we see them. We have a taxonomy. We have some early spending forecasts, and I'll leave you with some essential guidance. But before I start that, what I'd like to do is sort of lay the groundwork around what we see as sort of the launch pad for Gen AI investment amongst enterprise buyers. So we've been doing research on digital transformation for about 7 years formally. So it is what you might imagine us to do. We built maturity models, we did survey work. And one of the things we did was we built what we call the Global Performance Index, which is essentially tracking the performance of publicly traded companies. But then we apply some of our databases to those buyers to determine if they're digital champions or digital challengers. And the data you're looking at on this slide happens to be manufacturing, about 3,300 manufacturers, 20% of which we evaluated as digital champions. And if you look at the top left, that's the revenue performance of those companies. And you can see how much better the digital champions did, and even better on the profit performance. And if you look in that window, that it represents the pandemic. So the point being that you can see the slope of those curves increase through the pandemic, which means they were able to adapt faster and better than the rest of the cohort. And the reason I bring this up is the introduction of Gen AI is going to be another disruption, very different, of course, from the pandemic, but it will be these companies that that will be most willing and able to invest in Gen AI. So I think what we need to realize is it's not digital transformation anymore. It's really digital business. And you can see this quote from Lydia at Pfizer talking about having a digital strategy for the business, not having a business strategy in a digital world, not having a digital strategy for the business. And I think that's one important takeaway. Another is that what we see is what enterprises struggle with most is the data. So the actual algorithms, the transformer algorithms on the machine learning side, the random forest, all the algorithms are not highly differentiated. And what makes success is the ability to manage data. And you see this quote from the CEO of Williams Sonoma about she doesn't want to call it artificial intelligence. She wants to call it data intelligence. And the third thing I'd like you to sort of take away from this slide is, as you're thinking about your own deal pursuits, it is these digital champions that are most likely to be your early lighthouse accounts. So those are, that's sort of, I want to lay that foundation because that's the market conditions coming into thinking about how investment is going to play out. So we wrote a report called internally we called it the Gen AI Blueprint. But it was sort of a stake in the ground on the taxonomy. I'm willing to make it available to anybody who joined the call. Just let the organizers know, and I'll get a copy to everyone. But we broke the market down into these 5 categories, with these 2 existing categories that are highly attached to the Gen AI proposition. And what I'd like to do is now go through these and share with you how we see these markets playing out. And before I do that, though, you should see that this is a market with a diverse set of vendors. And this is called what we call a market glance, where we try to find representative vendors for each of the categories. And it's not exhaustive, by the way, just representative. So there's at least twice as many more companies in the market. And we've actually done a market glance for each one of these major categories on this one. So we've drilled down even deeper. But the point is, a lot of opportunities for partnership. These aren't going to be deals where there's going to be one single provider that does it all. This is going to really depend on the ecosystem to deliver value to the enterprise customer. So when thinking about how the markets develop, I took those 7 markets I showed you on the taxonomy slide, and we broke them into 15. And then we wanted to follow what we saw the pattern of investment would be. It would start with a proof of concept investment to get familiar with the technology, which is the green. That would then go into project investment for production, the purple. Then we would see real scale investment in that area. And then the yellow is post scale. So in this first horizon, which is this year, it really pivots around the productivity use cases. You can see I put a star in there as the trigger. And that is what's going to drive the investment this year, or most immediately. Doesn't mean there isn't other investment going on, as you can see from the color coding. It's just that's what's going to drive it in the first horizon. The second horizon, we start to see functional use cases. So companies start to combine their own data models and external models with the large language models. And they look at areas like marketing and sales and finance and build functional use cases for Gen AI. And then in the third horizon, we start to see things that are more industry specific. So the big trigger here for investment are the industry use cases. So what I'm going to do is, now that I've sort of familiarized you with the color coding and how we're looking at it, I'm going to go back to those 5 core markets in the taxonomy and look at them individually. So for infrastructure, you can see it's growing at 71% per year. The productivity use case trigger, it provides further scale to processors, as well as AI specific infrastructure as a service. As the functional use cases start to come on, we'll see scale investment in AI specific PaaS services. And then as we get into widespread adoption with industry use cases, it really becomes the support services required in specific system management software to support the running of these models, which I'll get into a little bit later, how that makes this a very different market. That's what that scales. So in the infrastructure world, the market dynamics really revolve around compute. It's the center of the deployment conversations these days, but it's really more than just fast GPUs, although differentiation for the as a service guys can be, even the hardware guys, can be difficult because basically everyone's using the same processors. Once companies want to augment um, the public models with their own data, then federating across the environment and protecting sensitive data will become the top concern. And at the end of the day, costs are quickly becoming an inhibitor to adoption. We have a lot of conversations with tech buyers these days about how to think about optimizing your spend and your workloads for AI specific activities. So the winning tactics is, infrastructure companies really have to have a complete message that includes consideration for storage, in networking, especially fabric networking, and differentiation will really come from the specific silicon or software that can provide predictable cost and performance. And by the way, though, as we see people sort of building their own, on-prem options will be attractive in certain deployments where more control can be applied. However, there's going to be power and cooling challenges, and you'll see that create demand for co-location, where that's preferable over enterprise-owned real estate. And the portfolio has to have a balance of cost and performance needs. And before I leave infrastructure, although it's not in the numbers, I also want to mention the emergence of the AI PC. From what I understand, I'm not the PC guy, maybe Loren knows. Qualcomm already has the chipset. AMD will have one this year. Intel will have one towards the end of the year. So if you think about 2027, imagine a chemical engineer who has a 1 billion parameter molecular model on her laptop that she can use to run formulation simulations and assay on those formulations. It's going to get really incredible. It's not all going to be about big centralized cloud deployments. There's going to be task-specific use cases that we see that the emergence of this AI PC capability will take advantage of. So let's talk about AI platforms and foundation models. We put these together because they're so related. That they're more than doubling every year over the next 4 years. It's fairly well established now that it's not going to be one platform to rule them all. It's not going to be just OpenAI. There's going to be a lot of choices. And then as companies blend their own data with the models, the emergence of the AI platforms will accelerate because that's how companies will learn to orchestrate the models that they build on top of them. And then by 2026, we'll see a real robust market for domain-specific foundation models to support those industry use cases. So on the foundation model side, think about ongoing innovations in foundation models, offering improved multilingual reasoning, coding, and that goes across both the proprietary and the open source models. And while the foundation models provide immense potential, they also bring certain risks, hallucinations, toxicity, copyright infringement. In fact, on the platform side, there's a couple of major vendors, notably Microsoft and IBM, who have publicly stated that they will indemnify customers for runaway costs or bad results, which is amazing to me. I've tracked software for a long time, and I remember the days where the only thing the software vendor would guarantee is the CD drive code came on, right? Not the code, but the media came on. Now they're indemnifying against results. It's an amazing shift to me. But it is important to ensure responsible AI development in this market. So the winning tactics, it's really about harnessing the economies of scale and scope, finding the right balance between broad models and specific applications. And that will require a portfolio of offerings from the foundation models in a variety of sizes. They need to make it easy to deploy a wide range of use cases. And of course, progress towards multimodality will contribute to that goal. And Of course, by multimodality, I mean text, image, video, structural content and information all being interrogated and organized together. And then we really think an important tactic for foundation model vendors is to build a large ecosystem, including downstream ISVs and upstream infrastructure providers. The other half of that is the AI platforms, and they make the foundation models work for the enterprise. They support model selection, they provide fine-tuning tools, they have capabilities that adapt the base models to enterprise use cases and help validate the fine-tuned models. And we also think that there'll be this convergence of Gen AI with traditional machine learning platforms so that companies can integrate the approaches and magnify the value. There's going to be a lot of what we would call hybrid use cases that are machine learning plus Gen AI and some interpretive as well. Things like large language model ops will be built into the platforms, and of course, assurance tools and monitoring. So what are the winning tactics for AI platforms? Well, there's a number of capabilities buyers are looking for, as you can see from the list I just went through. What it really comes down to is making the platform as out of the box as possible, including APIs, data integration, prompt libraries, model evaluation, model certification, and also, no surprise, a flexible approach to pricing. So let's talk about Gen AI applications themselves, also almost doubling every year for the next 4 years. So this is really supported by the adoption of those foundation models and platforms. They'll grow at this rate of 90%. In the immediate horizon, much of the revenue will come from new capabilities embedded in existing applications. So your Salesforce, SAP, Oracle will embed Gen AI capabilities and applications. We've already seen it with the Copilot and the Duet on the Microsoft and Google side. And then new functional apps will emerge in the second horizon, and then we'll see a wide range of industry applications in the third horizon. So we see this widening of the available applications as we go over time. So for the applications, although I talked about the use cases being triggers being spread over 3 time horizons, doesn't mean there aren't some viable functional and industry applications available. In fact, native Gen AI applications for copywriting, coding, and image generation are already transforming those functions, and have already reached an ARR of 100 million. And industry-specific applications are already available in healthcare, manufacturing, education, retail, telecom. So I don't want to paint this picture as you can wait until Horizon 3 for the industry. We're already seeing examples. It's just that they won't hit scale until that third horizon. And oh, by the way, Microsoft is telling us that there's 1 million customers now that have taken Copilot. So if those clients are paying $30 a month, that means there's $360 million of revenue already in Microsoft, and Microsoft has 1.2 billion Office users, and they've only converted 1 million of those so far. So a lot of on-ramp for the productivity apps as well. I should say runway left for the productivity apps as well. Now, in our end user survey work, we see knowledge management applications are identified as having the most potential for business benefit. So the applications that really can harvest knowledge as well as the content will be of great interest, right? It's not just organizing the data, it's also being able to incorporate the knowledge you have within your company, or have the application vendor do that for you. And there's an interesting market dynamic between software and services. So these applications aren't like the applications we're used to, right? We're used to we buy a software application, say Salesforce administration or something, and we buy it, we install it, and it basically behaves the same as long as I own it. And with Gen AI applications, though, there's a notion of context drift and data drift. The models need constant care and feeding. So it changes the proposition for the software vendor. If you think about how they think about they deliver the services on top of the product, it's to use today, it's patches and things like that, maybe enhancements as you go along in a SaaS environment. But this is going to take higher level service personnel to monitor and watch these applications and help fix them. Now, it's going to be interesting to see if those set of services will be provided by the software vendor, or will it be a new line of business for services firms to offer to their clients. So that's something to watch to see how that plays out. So on the winning tactic side of applications, innovation will result from an ability to apply the unique knowledge, like I said, to decision making and generation, regardless of whether it's a broad foundation model, a functional domain model, or an industry domain model. But innovation alone won't cut it, as buyers will expect capabilities that minimize the risk, both the bad outcomes and runaway costs. I talked earlier about a couple of vendors that are willing to indemnify for those things. And then robust and perhaps redefined approach to partnerships, that services software balance that I talked about across the whole stack will really factor greatly in who will win in these application markets. And we get to services, and this is pretty straightforward in terms of how this progresses over time. As you might imagine, it's planning in the first horizon, it's implementation in the second horizon, and then it's all post scale after that. This is a really front end loaded market, but it's growing very, very fast in the early years, especially. So if we think about services firms, it's interesting to me because there's just been a ton of investment from the service firms in Gen AI. For a while there seemed to be a press release every day. So there's been a lot of money that's gone into it, but then it makes it hard to differentiate. But I think service firms are really good at knowledge management. If you remember the old knowledge management markets from 10, 15 years ago, nobody seemed to get it right. There was a lot of failures, but the one industry that did a better job of it were the services firms in capturing the knowledge within their organization. And I think they can bring some of that to bear on engagements here. But I think it's the last few bullets there that are most important, even though the technical skills will be important, but the differentiation is challenging. But I need governance guardrails. I need to augment my need for skilled developers as the buyer. There's tons of cultural concerns and change management, especially anxiety about job loss. So I think a big part of the winning tactics are going to be these soft factors and the way the service firms address those soft factors and demonstrate credential to the market that they could handle those things better than others. And if they do that, they can be the trusted advisor for strategy, use case selection, roadmap development, and scale execution of what gets deployed. They really have to thread the needle of moving quickly to stand out in this intensely competitive market, while taking the time to really vet the Gen AI opportunities with customers. So I think building this sort of flexible factory style delivery models once you're in, that's what's going to take. Someone much smarter than me once told me that change management is 3 campaigns. It's a political campaign, a marketing campaign, and a military campaign. And the services have to think that way, right? The political campaign is the C-suite agreeing on what to do, political consensus. And then once they agree, selling it to the management at the organization as why they want to do it, and then establishing a beachhead and starting to execute on that plan. Those are the 3 things in the change management. And I think the service firms that will win will have a demonstrated ability to take folks through those 3 campaigns. With that, I'll close with some essential guidance. Buyers will see Gen AI as an acceleration of their digital transformation, which I talked to you about on the first slide, but they'll continue to struggle with the availability of skills, the variability of cost, the migration of risks as they try to prioritize their use cases. And vendors must keep these drivers in mind and think beyond the tech as they build product roadmaps, set pricing, structure services, and build trust. Perhaps most importantly, vendors must understand the requirements of the use cases and the necessary architectural underpinnings. They must understand the roles impacted at the customer and the ecosystem partners that are needed. And I'll close with the way I opened. This is definitely ecosystem pursuit set of markets, and those with the best teams are going to win. And with that, thanks for your time and attention, and I'll turn it back over.
Thank you so much for that. Frank, anyone else want to say any last things before we kind of release everyone to the wild?
Well, first of all, thank you, the IDC team, for the data and the information. It is beginning to become encouraging, Loren, as you said. We'll see. I think it's, I think we've bottomed, and it's, and it's coming back, particularly in the endpoint device market. And then Bob, this was excellent. There's so much to this space that you broke it down nicely, and I think enable us to start thinking about it. When I look at it, I think about it from the standpoint of the folks on this call, in the vendor community, have obviously a set of roles and what they're doing, but also the distributors and the solution providers are also trying to figure out how their services and support capabilities can help, in this space. And of course, there's a lot to evolve there, but everybody's thinking about it and talking about it. So it's, it's really a big deal, right? So I think this was very helpful. So thank you.